In today's video, we'll look at a vital topic that cuts across national borders: the impact of America's income divide on Europe. We'll look at how economic disparities in the United States affect economy, social, and political dynamics on both sides of the Atlantic, as well as propose strategies to close the gap. The wealth gap in the United States is more than just an economic divide. It's a reflection of deep-rooted inequalities. We'll break down the latest statistics and trends that illustrate how wealth is distributed across different demographics. We'll examine the influence on trade investment flows and economic policies within European countries first, driven by economic trends in the US. America's wealth gap doesn't just affect its citizens, it has a ripple effect on the global economy. We'll analyze how this disparity influences global markets and policies, from investment patterns to international relations. Economic instability. When a large portion of wealth is concentrated in the hands of a few, it can lead to reduced consumer spending, impact global economic growth, and create instability in international markets. Political polarization. High levels of inequality in the US can contribute to the rise of populist movements and political extremism around the world, as people in other countries may see the US model as a warning against unchecked wealth concentration. Global power dynamics. The US, as a major economic power, can influence policies in other countries through trade agreements and investment, which can exacerbate existing inequalities in those nations. Erosion of trust in institutions. When citizens see extreme wealth disparities in the US, it can lead to a decline in trust in democratic institutions and governance systems worldwide. Impact on development. US economic policies and practices can affect the ability of developing countries to achieve sustainable economic growth, particularly when they involve exploitative labor practices or resource extraction. How does US wealth inequality contribute to these global impacts? Tax policies. Lower tax rates on the wealthy in the US can encourage capital flight to offshore tax havens, reducing tax revenue that could be used to address social issues both domestically and internationally. Corporate influence. Large US corporations have significant global reach, and their practices can influence labor standards and economic conditions in other countries. Financial market volatility. Extreme wealth disparities can create instability in financial markets, leading to global economic fluctuations. Addressing the wealth gap requires multifaceted approaches. We'll discuss various strategies, from policy changes to grassroots initiatives that could help mitigate these disparities and promote economic equality. The journey towards bridging America's wealth gap is not just complex and challenging, but a global concern with significant implications for the global economy. However, understanding its implications and actively seeking solutions is crucial for a more equitable future. Stay tuned for more insightful discussions on similar